Welcome back to the ICT or SMC beginners course. Today we are going over the number one most important ICT concept to date. And that concept is quite simple, but if you don't use it properly, you'll never be able to find success using these concepts. So without further ado, let's get into liquidity. Now, in order to understand where and how to spot buy-side and sell-side liquidity on a chart, you first actually need to understand what liquidity is and why it actually exists. So let's go over this quick theory here in regards to that trading is a net zero game. And what do I mean by that? Well, I mean that for every buy order that is entered into the market, there has to be an equal and opposite sell order for those orders to be filled and for both of those traders to get what they want. So if I put in a buy order into the market, somebody has to sell that item or that asset to me so I can get it. I can't just buy it from nobody, and they can't just sell something to nobody. There has to be a buyer and there has to be a seller, and whatever price they agree on is the price that you get filled at or the price that the market executes at. Now, what does this look like visually speaking? Well, for anybody that has some basic math understanding, let's imagine that a buy order is a net positive and a sell order is a net negative. So if you put 5 or 4 buy orders into the market, there has to be somebody on the other end of that trade that needs to sell you those equal 4 orders. Otherwise, you will not be filled on these, and these will just sit in the market until somebody agrees to sell 4 of those assets, 4 of those contracts at the specific price that you're willing to buy them at. And until that happens, nobody gets what they want. And when that does happen, this number has to equal 0. For example, if we had 4 buy orders and we had 3 sell orders, essentially what happens is this number is going to be executed on 3. So 3 of these contracts will be filled or executed on. You're going to have a remainder of 1 contract that is going to sit around until somebody else agrees to sell 1 contract at that specific price. So I hope that kind of makes some sense. If it doesn't, we're just going to go over what it looks like in a chart anyways, and it's all going to click for you, and it's going to make perfect sense, I promise. So now that we've kind of gone over that quick theory that I'm sure was boring for a lot of you, let's hop into the charts and see what I'm talking about. So first things first here, let's go over buy-side liquidity. So what actually is buy-side liquidity? How do we describe it? What might be the definition for this? And simply, the definition that I have for buy-side liquidity is where there are willing buyers at a high or premium price. Now let's break this down and unpack this a little bit and really decipher why it's called buy-side liquidity and what this means. So the buy-side liquidity is essentially going to be places or locations on a chart where these willing buyers are going to purchase and they're going to be happy to purchase. And why are they going to be happy to purchase? They're going to be happy to purchase because they have buy stops there that are in the form of stop losses. So these people, and they might not be happy to have their stop loss hit, but it's better than having their trade go way against them. So these people are going to have stop losses above places that are seen to be resistance, and they're going to put their stop loss above this, which means that there are resting orders there in the form of buy stops because they went short at resistance. And there's also going to be breakout traders who put buy stops above this resistance or so-called resistance area so they can get their breakout as it starts. So you're going to have people that want to go short in this area. So they're going to go short once price comes up over here. Right? They see the price comes up into this level up here and they're going to go short at that level. They're going to put their stop loss just above the high, and this is going to be their buy stops. They're going to have buy stops above this high, which means that price is going to have willing buyers. There's going to be willing buy orders above this high. And people that want to trade the breakout of this level are going to be putting a buy stop like this with their stop loss below the low. And they're going to be trying to target the breakout of this level, which means that there's going to be resting buy stops right here in terms of breakout traders. So there's lots of buy orders up here in the form of buy stops, which is why we call it buy-side liquidity. So I hope that kind of makes some sense now. And now let's take a look at sell-side liquidity. So when we're talking about sell-side liquidity, we're essentially just talking about the opposite, which is that we're going to be looking for locations where there are willing sellers at a low price. We want to find a location on the chart where there are going to be sellers in the market at a price that is really quite discounted and not really a good place to be a seller. And this essentially is going to be in the form of stop losses. So people that are going to go long at resistance, at support. So if this is considered a support area. They see price come back over here, they're going to long, and they're going to put their stop loss below the low. Now, once that gets violated, they are stopped out, and they're stopped out using a sell stop. Okay, so they buy in, and in order to cancel or close that position, they need to use a sell stop, which is the opposite of a buy order, causing sell side liquidity down here. Same thing goes for breakout traders. Breakout traders see this as a support zone as well, or a support line. Supply, demand, whatever you want to use. This would be a demand zone or a support line, and they're going to put their entry below the low. So they want to get involved in this trade. When price breaks below this low, they're going to have their stop loss somewhere in here. But this entry order here is also going to be a sell stop because they're trying to sell the market and get in short. So relatively close to where this support trader is going to have their stop loss, a breakout trader is going to have their entry or their sell stop to get into the breakout trade. This creates an abundance of sell orders below this low here. Now, how do we determine that this low has a lot of liquidity and this high has a lot of liquidity? Well, let's get into that. So where do I actually find this liquidity on the chart? Is it anywhere that I think there's buy and sell stops? Well, essentially, yeah, but more realistically, you're going to find liquidity above old highs and below old lows. So if we take a look at this chart here, there's going to be liquidity above this high, below this low, and I believe these are going to come into play at some point in the near future. But there's going to be liquidity down here, above this high here, above these highs here, and so on. But are all of these made equal? Well, no. Although they all hold liquidity, not all of them are as important as some other ones might be. So to clear these up and really refine down your liquidity points, I like to use these specific points on my chart. So in order to get off this chart and actually into some price action, let's first take a look at this first example here, which is going to be previous day and week high and lows. So in this example here, we're looking at the daily NASDAQ chart here, and we're just going to mark out this level of buy side liquidity here with a BSL. We're also going to mark out this daily low right here, and ultimately this daily low right here. Now, why are these points important? Well, because this is a swing low. These are not swing lows. So although there is liquidity below these daily lows, this is going to be the most prominent low on the daily time frame because it's a swing low, similarly to this, and this is actually going to be a swing high here. So if we have these levels marked out here, I'm just going to drop down onto a 15-minute time frame because that's where I do lots of my intraday analysis and things like that. So as you can see, this is our daily buy side liquidity level. This was our daily swing low right here, and then this was obviously our higher time frame or our big daily swing low over here that we ultimately think price could be traded towards. And as you can see here, price does in fact take out this high right here. It liquidity sweeps essentially, so all the long traders, all the breakout traders that wanted to go long here, they got stopped out. And everybody that saw this wick right here and thought this is going to be a resistance area or a supply zone would have gotten short here, had their stop loss above this high and been stopped out as well. So everybody that had buy stops here was liquidated. That's why it's called buy side liquidity. And we end up pushing back down, shifting 15-minute structure, creating this big 15-minute fair value gap right here. And then ultimately we end up rejecting this, and we should end up continuing down towards this pool of sell side liquidity, which once again was that other daily swing low there. And there we have it. Price does in fact come down, targets this liquidity. And why did we want to target one and use the other one? And the short answer is because that's how the price is going to move. That's how markets book price. That's how the algorithm works. It's going to go from buy side liquidity to sell side liquidity, and sell side liquidity to buy side liquidity. Now, in order to keep this relatively quick here, this is going to be the sell side liquidity target that we were talking about before. And as you can see, this does in fact end up getting ran as well. And we keep this high intact, which was going to be our market structure high before breaking structure and continuing lower. And these highs are actually going to come back into play because, like I said, markets move from sell side liquidity to buy side liquidity and buy side liquidity to sell side liquidity. So after taking out this point here, it's worth noting that this high does become a daily high, but there's also some other qualifications in here that make this a high probability liquidity pool, which we'll get into next. All right, so we went over the previous day and week's highs and lows. Let's go over the next one here, which is going to be the session highs and lows. And that's going to be Asian session, London session, New York AM session, New York lunch session, and ultimately New York PM session. All of these sessions within a day are going to be high probability liquidity pools that you have to keep your eye on. Now, the last note that I want to make here is just this final tip here, which is going to be the relative equal lows and relative equal highs. This has got to be one of my favorite confluences to use when trying to find liquidity, because when you can have daily highs and daily lows that are relatively equal, or session highs and lows that are relatively equal, you have incredibly powerful liquidity pools that cannot be ignored. All right, so back on this exact same chart here, you can see we have our sell side liquidity and our buy side liquidity again, and we have just swept this sell side liquidity pool. Now, like I said earlier, once we sweep a sell side liquidity pool, we're going to want to target buy side liquidity. Now, where would this buy side liquidity be? Well, it's going to first off be above this high here. We know this is a clear, prominent high. This is going to be a daily high for sure, and this is actually Wednesday's 9 a.m. high. So this is a daily high and an AM session high on Wednesday. We're then going to work our way down here, and we can see that we have this gorgeous set of relative equal highs right here. And this is a really nice pool of liquidity for me, because it not only is going to be a 1 o'clock high on Wednesday, which is lunch high right here, but we have lunch high, then we have Thursday's AM session high, and this is also going to be Thursday's high of day. So we have Thursday's high, and we have a Wednesday lunch high that are relatively equal here. So I'm just going to zoom in so you can see that this doesn't actually take this liquidity pool, it just builds up more here. So this is a really nice pool of liquidity. Ultimately, we also have this high right here, which is going to be your Friday lunch high. So if you take a look at the time just down at the bottom here, you can see that this is at Friday at 12 o'clock p.m. So this is our lunch high on Friday. And then finally, our last pool of liquidity that's prominent and obvious to pick out here is going to be Monday's 3 a.m. high. And this is actually going to be Monday's London session high. So you want to mark that out there after we sweep this low. Like we said, we're going to expect price to expand up higher here, and ultimately that's what we can see price do here. It does come back down, but it never takes out this low. This low should be safe because it was the low that swept sell side liquidity. Ultimately, we end up coming back up, taking out this high. And now what's next? After we take out buy side liquidity, what did I say? Well, we're probably going to come down and take out sell side liquidity. So this is a clear sell side liquidity point. This is Tuesday's at 12 o'clock. So Tuesday's lunch liquidity. This is going to be session liquidity. Why don't we take this one here? Well, because it's not really session liquidity. At 6 o'clock, this isn't a session liquidity level. This isn't a time-based liquidity level. This is just a swing low. So although there is liquidity here, this is the more prominent level of liquidity. So as we can kind of play price out here, you can see we come down below this low here. And then what are we looking for? We come back into the range here. What are we looking for? Buy side liquidity. Well, now we have this Wednesday's high. This is Wednesday's 9 a.m. high. So this already is going to be a daily high, which should be a pool of liquidity. This is Wednesday's AM session high, which is a pool of liquidity. And it's also relatively equal to this high over here, which is Friday's lunch high. This is a nice pool of liquidity to grab, just like this pool up here. So what can we expect? Higher prices. Ultimately, we come up here and take out this buy side liquidity level. And we know that we have these buy side liquidity levels up here that need to be taken out. Now, unfortunately, here on Friday, we actually do have NFP, so I don't want to take too much, bring your attention too close to what goes on here, because this was ultimately a news-driven event here. But we end up taking out this buy side liquidity and then ultimately running all the way up for this high over here and continuing to trend higher. Now, the last thing that I want to leave you here with is that we're not always going to expect a range-bound market where it's take liquidity, take liquidity, take liquidity, take liquidity, take liquidity. Otherwise, you're never going to move in price. You are going to have to trend, which means it's not always going to be buy side to sell side to sell side as easy as it was in this example right here. Lots of the time, you're going to see scenarios like this, where you're just going to run this buy side liquidity, run the buy side liquidity, and then run this extreme buy side liquidity, and then you can look for stuff to come back into the range. Similarly to down here, where we did run this low and this low and this low and this low and this low, but this was really the low that we were focused on. This is the clear level of liquidity. Everybody that would have gone along at any point within this point in time was probably feeling pretty safe that this was a protected low. Obviously, we know that that's liquidity, and we're going to run through that. Now, this is your protected low because it was the leg that manipulated below liquidity and stopped everybody out. So this is where smart money is involved, and smart money is going to protect their position, for lack of a better term, so this low should not be violated. That is, until they can distribute their position to higher prices above liquidity. So they're buying down here, and since they have such a big order, they need liquidity to exit their position, and ultimately they're selling some position here, selling some position here above this high where there is liquidity so they can actually be filled selling above this high, and then ultimately selling above this high here, at which point price is permitted but isn't necessarily going to come all the way back down here and revisit this low. Because if we continue to trend, we probably end up sweeping out some internal liquidity in here and then ultimately continuing higher. So I hope this is starting to kind of make some sense to you guys. We can now understand why liquidity is so important, as well as what it looks like on a chart, and finally, why time-based liquidity is so important, because without it, you're just going to be a mess looking at any high and low, and ultimately you're going to end up missing the big moves and taking the wrong ones. So by implementing the time-based liquidity and using the rules that I laid out in front of you, you should have a much better time identifying these liquidity pools and ultimately analyzing and trading with them. If you did enjoy the video, make sure to like, comment, and subscribe. If you do have any questions, make sure to let me know in the comment section down below as well, and I will do my best to answer those. And until next time.